Hello friends. Today COVID 2019 coronavirus is on everyone's lips. It surrounds us all. In fact, engulfed us with its enormity. Whether in news or in WhatsApp or in Twitter or you name it. Lot has happened in the last 4 months and lot is expected to happen. Probably bad or worst still. It is anybody's guess. It is the first time in our history that previous year is referred to more than the present year. 2019 by way of COVID 2019 overshadows 2020. Some countries suggested that we ought to cancel the 2020 altogether and file our returns for the next year with a clean slate. Be it the way it is, as we all have little or no control over the happenings. COVID 2019, no doubt, is a happening in a couple of centuries, and by the time it finishes, it could well be a happening in a millennia. It is wrong to suppose that things will go wrong with us or our investments only. Some point in time things will change. So, let's see what is most likely to happen with our dear Brightcom Group. But first, the usual disclaimer. Also, this video should be taken in conjunction with our last video. Before going forward, one point which was not highlighted in our previous video is the company was regarded as one amongst 16 companies that rose by over 100% in the year 2019 according to data provided by ACE Equity. Can it repeat the same going forward? It's anybody's guess based on how it fared between our last video and this one. Also, the preferential issue of 3.14 crore equity shares at rupees 10 per share has got approval from BSE but got stuck in NSE for a rather silly reason, and of course COVID-19. Meanwhile, the company has put up an investor presentation with exchanges, obviously for the shareholders and prospective investors to know about the market overview and company's prospects. All the finer nuances about the business of the company is fairly handled in details in the last presentation covered in our video dated 20th March. However, for a change, the company has tried to rather educate their shareholders and investors about the industry working and structure of the digital advertising industry. One can pause and read through if these details are of interest. No rocket science though. The digital advertising channels may be of interest for some technical detail finders. But what intrigues any investor is the potential of digital marketing growth owing to internet users swelling across the world, which is further elaborated by graphs showing users' growth and potential going forward. The point is emphasized with the fact that global ad spending is shifting faster towards the digital platforms from the print and other platforms. It is quite intriguing to note that digital ad spending is growing at 12% CAGR, which is healthy for any industry, in the ecosystem growing at around 5% in totality, especially in an inter-competitive platforms having significant upper hand vis-a-vis all others. On the net basis though, it stands at fourth step under broadband, in-home video entertainment and TV advertising. In the post-pandemic scenario, it is rightly pointed out that the consumer behavior can only be judged in the hindsight wisdom. No one can put a hand on the heart and predict with any conviction for now. However, the COVID-19 behavior has been favoring digital advertising hands down. And mind it, these are percentages in usage gaming up 24%, retail jumped 34% in March, social media 29%, travel marketing down 38%. Some of these may translate into ad spend too if the trends remain and maintain themselves. The digital advertising industry evolving trends are more of a historic nature, and given the COVID-19 scenario, it does not hold good, at least for now. So one can avoid it or keep it on a back burner. Now, the most interesting part of the presentation is competitive situation of Brightcom Group, where they have ticked all the verticals for themselves, but each of the competition lacks practically most of these. If your company has identified 9 verticals within digital competitive space, others are barely in 3 to 4 of these, barring one, Matomi at Israel, which is in 7 of these. I'm not sure that being in more verticals is essentially a benefit for the incumbent. So far, it does not seem so. But going forward, perhaps yes. That's what Brightcom Group management is vying for. Many of these companies are listed entities, and if one is inclined, one can check the stock prices of many of these. My sincere good wishes and happy investing as usual.